always like to start with the vehicle deliveries. This is the backbone of Tesla's business. How many cars did they actually sell in the quarter? 97,000. That gave us a good clue to plug into our models. This is what the financials were looking like heading into the quarter. As you can see, strong growth. Tesla lost about 200 million last quarter on revenue of 6.3 billion. This is what I thought those 97,000 deliveries translated into. I was estimating revenue of 6.4 billion, a loss of about 100 million, or actually 62 million if you want to get technical with it. This is what Tesla actually reported, a little bit lighter on the revenue, 6.3 billion, and 300 million or so if you round up of operating income, actually about 261 million. So profitable quarter from an operating income and actually a GAAP perspective for Tesla. So they huge surprise on profitability. And I think a lot of skeptics are going to point to the year-over-year decline in revenue and operating income from Q3 2018. It's very important to not take that out of context. First of all, you can see that this was like a huge growth quarter for Tesla. They were delivering a ton of early Model 3s at super high ASPs with the $7,500 tax credit. They had higher Model S and X sales. So despite delivering more cars this quarter, revenue was decreasing a little bit, but I think it's unfair to comp it to that quarter. If you look back at 2 years ago to the Q3 2017, you can see we more than doubled revenue in 2 years from 3 billion to 6.3 billion. We've gone from losing money, 500 million, to actually making 300 million. So in a long-term trajectory, these are incredibly encouraging results. And if you continue to factor in the growth from the future products, I think we're just getting started here for the fun of Tesla. So the real reason they surprised this quarter was gross margin. Last quarter, they had overall gross margin of 14.5%, which as you can see has sort of been struggling since the Model 3 launched, their lower price vehicle. I was expecting a bounce back to about 15.8% this quarter. So a slight sort of sequential improvement as they continue to make improvements in the manufacturing line for the Model 3 at Fremont. This is the number that surprised. Huge beat on gross margin, 18.9%. And this is what drove those profits throughout the rest of the income statement and led to that really strong operating income number. But not only did we have Tesla making way more money per car sold, they also did this while reducing expenses. As you can see, operating expenses were almost the lowest they've been since 2017, 928 million, a huge decline from Q3 2018. So even though Tesla delivered more cars this quarter, they actually dropped their expenses. This is part of a huge cost-cutting effort that that's been underway at Tesla for almost a year or two now, where they've really decided to focus on profitability, but really at a core company culture level and just trim unnecessary expenses and really sort of mature as an organization. And we are seeing the results of that. Strong revenue numbers, great gross profit and reduced expenses. And that means millions, actually hundreds of millions of dollars flowing to the bottom line. Energy revenue, I was expecting about 400 million. They came in right about 402 million. So a good quarter from that. Lots of excellent commentary on the conference call as well. And the other thing that didn't get enough love that I wanted to point out is the gross margin on that energy revenue of 22% is the strongest we've seen since 2017, a huge bounce back. So not only do we see energy revenue start picking back up again, but the profitability of that revenue is headed in the right direction as well. And if we take a look under the hood at the energy business, battery deployments, this has been a huge bright spot for Tesla. Those Power Pack and Powerwall products hitting a record of 477 megawatt hours installed in the quarter. Huge growth year over year from 239, over 100%, or about 100% growth. I think this is just getting started and it's set to grow in a huge way, but more on that in a second. Solar deployments, which had been a huge sort of weak point for Tesla since the acquisition of Solar City. They've been switching away from leases and to cash and loan sales, and that meant declining energy generation installed in terms of megawatt hours. Now we saw that bounce back up 48% in the quarter to 43 megawatt hours. So that is the result of Tesla, renewed focus on the solar leasing product in both residential and commercial that they put out this quarter.